Hey everybody, this is Jim at sp500chart.com. It's Sunday afternoon, a little bit before 1 o'clock. We're going to take a look at what happened this past week. After I remind you, the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you need to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Looking here on a 30-minute chart, just to remind you, we have this orange rising wedge that actually started to form just a little bit above 3,000. That's off to the left of the chart here. Well, if you don't believe me here. There you see it. That's pretty much where it started right there. I don't think we say it started here. I think this is where we actually started to see that wedge form. And as we talked about a couple weeks ago, or a few weeks ago, we sort of blew up over this rising line of resistance, and sort of that gave us warning that we were likely going to start heading down for at least a bit. Again, why is that? Well, it just so happens that the markets rise pretty much in a controlled manner while we're in between point A and point B. When we get to point B, that's usually when the emotional traders show up. They either are scared or frightened of missing out, hence the term FOMO, fear of missing out, or it is people who are short the market who are just feeling too much pain. So they respond emotionally, and you get this kick above rising resistance. In the same way, you get often at bottoms, especially at major bottoms, you often get a panic flush out that just rips everybody to shreds emotionally. And those people who respond emotionally at tops are often the very same ones who respond emotionally at bottoms. And it's just, that's the way it works. It's the way it's always worked. So in other words, the people who bought here probably haven't sold yet. They'll probably sell at some point when we have I'm not saying everyone, but you know what I'm saying. Think of sort of the law of averages here. So the average person who buys high is also the average person who sells low. They're the same person in a sense. So anyway, so what's happened this past week? Well, we identified one good thing is we've identified what I think is a pretty solid line of resistance here that's nearly horizontal, and it's right around 34.25. If we get above that, then we start a new leg up, I believe. So that's certainly worth keeping on the chart. This green line we had identified, I think, the previous week, and we broke out above that on the 15th and 16th. We tried to get above it on the 14th, but couldn't, just kind of hugged it. Did get above it on the 15th and 16th, but then on Thursday and Friday, we succumbed to selling pressure. Because remember, this rising wedge here has a good bit of implied selling pressure in it. Still a good bit. Matter of fact, enough, like I said, to where if we didn't have a good reason to do otherwise, this would probably want to take us back down to about 3,000. Could be, however, that there is a better reason for us to not go to 3,000, and this week we examined a few instances in the chart where a rising wedge did not do that in the S&P. So now it sort of looks to me like we might be in a descending wedge, where this would be our line of resistance descending, and this would be our line of support also descending. So with that in mind, I have marked that and also extended those lines, and just in case it becomes applicable at some point in the future, it just so happens that as things stand right now, the apex to that wedge is just under 3,200. So that, maybe we don't get down to 3,000. Remember, that apex level often is a foreshadowing of support in a descending wedge, just like the apex in an ascending wedge, which in this case would have been, well, there you have it. What is it? Our apex was right around 3570, and that's about where we couldn't get over. So maybe we see the same thing in reverse here. But getting over this line I would think would set up the move to challenge 3425 again. And then if we get over 3425, I think we probably at this point would go on up and try to establish a new all-time high. So, is there anything to be learned from a 10-minute version of this chart? Not really. Not that I can see. Maybe, I floated the idea that maybe this was also an important line here. I'm not as sold on that idea now as I am on this, but I'll leave that there just in case. But other than that, guys, if this wedge idea is playing out, then I would expect a weak start to trading on Monday. But you and I both know that we are in somewhat of a news-driven cycle right now, and a small pattern such as this could easily get disrupted by some news. Remember, trend lines are like speed bumps. You have some that are very tall speed bumps, and it takes huge pieces of fundamental news to overcome that level of obstacle. These small lines are like very mild bumps. They're the kinds that you roll over at 25 miles an hour and hardly know it. So, if we get some impetus that is positive, guys, we could get over this line in a heartbeat. And if we get some news that is negative, maybe we get some of those fearful sellers out, and maybe they take it down underneath this line. That certainly is a possibility too. But for now, if everything else remains equal, and what I mean by that is if the news, if our expectation of the news cycle, and I don't know if the Ginsburg death is going to have much effect on the markets at all. That'll be interesting to see, because that happened late Friday, and I did not check the futures to see if that budged them. But anyway, all of that said, we're just going to keep watching it. For now, all these lines that are up here, they may be subject to revision, but so far it looks like a rising wedge and a descending wedge, and let's just see how it plays out. So there's your weekly review for the week ending September 18th. So hey, thanks for taking time out of your day to watch this. And as always, thanks for your very kind support. Take care.